Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, August 8th. Mixed trade overnight across the ag space. Corn right now is steady to about a penny lower. Same with the beans. Wheat prices are a little more mixed now, up 1 to 2 in Chicago and Kansas City, down a little bit in Minneapolis. Bean and meal, that has flipped now, trading about $1 better, while bean oil is still about 30 points lower. Yesterday's recovery into feed grains largely attributed to speculative buying, speculative short covering. We had funds buying about 8,000 contracts of corn, nearly 4,000 contracts of Chicago wheat. Still leaves them short a fairly large amount. However, we did see a rather sizable drop in open interest. Corn was down about 12,000 contracts, 4,000 contracts in Chicago wheat, and about 5,000 lower in open interest in Kansas City. Speculative trade across the soy complex was mixed. However, we did see a surge in open interest in beans. It was up about 21,000 contracts, while both meal and oil did slip a little bit. Without a trade deal with the U.S., China has been actively buying soybeans from South America, paying more than what they would have to pay for U.S. beans. It's still, we're still waiting to see if President Trump wishes to extend the current trade truce with China. That expires next Tuesday, same day as the USDA reports. Or he could possibly raise tariffs as China continues to buy oil from Russia. With Brazilian soybean plantings just over a month away, most forecasts are coming in at about a 1.5% increase over the previous year in terms of acres. However, that would make it one of the lowest year-over-year increases here in the last 2 decades. U.S. weather remains mostly crop-friendly. Extreme heat that's currently across much of the southern plains and western corn belt will gradually give way to more normal temperatures over the weekend, and by early to middle part of next week, more normal. There is a potential for some heavy rains and isolated flooding across north central regions of the Midwest. Traders do expect higher corn and soybean production forecasts in next Tuesday's USDA updates. Demand for U.S. corn, however, remains very strong. Old crop exports are likely to be raised another 25 to 50 million bushels, cutting into the old crop ending stocks. U.S. corn prices remain at about a $10 per ton discount to that coming out of Brazil through the month of November. A surprise given that expectations for higher production, perhaps even record production, as the second crop harvest in Brazil starts to wind down. More and more of their corn, however, is being used domestically for ethanol production. Argentine harvest wrapping up did advance only 1% in the last week to 89%. This according to the Buenos Aires Grain Exchange. They did keep their production forecast unchanged at 49 million metric tons. D's corn did reject trade over yesterday's low overnight and rejected trade below that $4 level earlier this week. So look for mostly sideways trade to end the week and likely into right up into the reports next Tuesday. Expect perhaps little to no change on the old crop soybean balance sheet. Stocks remaining pretty close to that 350 million bushels. We're down a touch from that at 340. Expecting slightly higher crush. New crop ending stocks expected to rise to about 355 million bushels. That's where we're at on the higher production and likelihood for slight cuts to the demand side. Wheat is recovering a little bit from its oversold condition. Very little war weather premium remain in the market. We're at among the lowest of the range of estimates for U.S. production. We're just under 1.9 billion bushels for all wheat. Exports are running strong. I wouldn't be shocked if USDA kicks that up another 15 to 20 million bushels. We look for stocks to drop below 860 million. Still down from the current 890, but above last year. ICAR, they did raise their Russian wheat production 500,000 metric tons to 84.5, just above the USDA's 83.5. Thanks for listening, everyone. Have a great weekend.